Welcome to a new edition of South Sound Business Report. For today, the topic is housing. Stay tuned. Hello, I'm Jeff Rounce. Thanks for joining us today. And thank you also to Rainier Connect, a locally owned telecommunications company, for sponsoring today's episode. It's a beautiful springtime weekend moving into summer. Perhaps you're thinking about finding a new place to live. On today's program, we'll talk to some industry experts in the residential apartment rental basis and also in the home sales. We'll look at today's housing market. That comes up after this message.
Here in Tacoma, there's a unique telecommunications company that knows how to serve their local community.
We believe in doing business locally, giving back, and connecting local businesses. And with Rainier Connect being a local provider, we feel it's essential for us to do business with them.
Rainier Connect, one company working to grow your business or to simply help you connect.
Thank you for choosing Rainier Connect.
Today I'm talking with Brian Reeder, President of Reeder Management Incorporated. Nice to see you today, Brian.
Nice to see you, Holly.
Well, your company has more than 4,000 units throughout the South Sound. Can you give us the geographical perspective of where your company operates?
We manage properties from as far north as Linwood and as far south as Tumwater and then out to Port Orchard on the peninsula.
And for the South Sound in particular, how has the market been for the past couple of years?
It's basically been flat. We have seen modest, if any, rent growth. It's been very hampered by the recession and the higher than usual unemployment.
Now, what would it take for the market to heat up again, just in general?
A couple of things would be very helpful. First would be to have employment get back to numbers that are more historical and more solid. And then the second would be the return of a lot of the troops who have been deployed overseas.
So when the troops came back, I think it was last year, that was a huge driver for your business?
Yes, for our business and a lot of the rental properties in the South Sound, because Joint Base Lewis McChord is a major employer, and also they have a lot of their soldiers and troops rent from us.
Okay, and let's talk about specific market niches. Starting with the senior market. A lot of people are trying to get rid of their homes and maybe move into something smaller. Is that trend happening here?
Yes, we're starting to see people selling bigger homes or homes that are out, let's say in the suburbs, Graham, Puyallup, et cetera, and moving in closer to services, closer to medical, et cetera. So yes.
Okay, but isn't it hard to sell a house in this market?
It is. Luckily, most of those people we're seeing have owned their homes for a long time. And so when they sell, they have equity and can sell at a realistic price. We're seeing some other people who tend to be newer buyers who are unable to sell their homes because they have higher mortgages at this time.
And what about the younger niche on the other end of the spectrum? College age students, whether they're in college or recent graduates. Is that market dropping off at all because of the economy? Are they living with their parents more, or what's going on there?
What we've seen in the South Sound is there's a lot of students who rent within walking distance of the campus. So PLU, UPS, Evergreen, University of Washington, Tacoma, they like to be able to walk to class and not have to deal with commuting. And so we see minimal impact around the campuses, but a couple blocks out, there's not a lot of activity. Most of them down here live at home.
What about families? Are they trying to cut back on their costs of renting more?
Yes, we have found a couple of things that have been happening. First of all, people are very hesitant to buy homes right now. Both it's more difficult to qualify for a mortgage, as well as people are concerned that we might see further declines in housing values, therefore they're very nervous to buy. And so we're seeing that families now are entering into the market and would prefer to rent. And with rental rates where they are today, you can rent a very nice home or apartment or condo for what would be a lot less than it costs to own.
Let's talk about price points. Past 5 years, how have they changed? Higher, lower for the different brackets?
The rents have come down a bit just because there's a lot more homes in the rental pool. People who have been unable to sell their homes have put them on the market to rent, as well as we're seeing investors buying some bank-owned homes and holding them as rentals for a while. So higher end rents have come down a little bit. The regular standard median rents are either are similar to where they were a couple of years ago, or they are slightly higher, meaning a couple of percentage points.
So people who were looking to rent a couple years ago maybe hesitated and then are looking now, it's not going to be a slap in the face, so to speak.
Correct.
They're still going to be able to afford that. And speaking of affordability, how is qualifying buyers or renters changed?
It has become more challenging because what we have is through this recession, people's credit has been hurt. People have given their homes back to the bank, and so we as landlords have to be more creative and find ways to rent to a pool of people who have either have employment issues or credit issues.
How are realtors such as yourself or property management, how are you making those bridges? What are some of the creative ways that you're coming up with to work with them?
To work with people with credit issues, we'll often take higher deposits, or we will figure out, we'll get a guarantor, maybe a family member or an employer who would be willing to guarantee the rent. And so our industry in general has become more creative over the years to make sure that we can continue to offer housing to a wide population.
And what about the terms? Before, the year lease was the popular thing to do. Are you doing anything like 3 months, 6 months?
Yes,
sort of
several of our properties have month-to-month options, and especially down in areas like Thurston County, where there's people were concerned about their employment with the state, we would put them on month-to-month because they would be much more comfortable entering into a month-to-month agreement when they're concerned about their job or possible transfers. So yeah, month-to-month is an option at a lot of communities today.
But does that create a hole then in the rental because you've got somebody who leaves and now you need somebody else to come in?
No, we have found that most people choose not to leave on a regular basis. You know, it's costly to move, they have to come up with new deposits, and so in general, people choose not to move.
Well, looking towards the future, where do you see some of the growth in real estate rentals?
What we hope is, as the economy continues to recover, people will be more comfortable to rent, either, move out from their homes, or roommates go get their own places. And as troops overseas return to the community, we're going to see a tightening of the rental market at that time.
Okay, and the prices, of course, being
steady. Yeah, prices will be steady, and as the economy gets better, we hope to see rents increase.
And are you doing anything different to attract these new renters, offering special incentives or amenities?
Yes, you're seeing a lot of the communities are doing upgrades because you want to, as it's a little softer right now, you want to offer the nicest, cleanest product. As well as there, from community to community, there are move-in concessions that allow, maybe half off first month's rent, or a lower deposit, or free screening. So yes, we're all being creative on marketing our products.
Okay, and what about building? Do you see any new units popping up, or will you be building or expanding?
There's minimal new construction, primarily because of the financing and the long delay in from the time you start a project to the end. So you're seeing right now the trend is buying existing product, remodeling it, and renting it out.
And then, just for the benefit of our business viewers, why are rentals so important to the business community?
They allow temporary housing for people who are either are new to the community and are looking for employment. A lot of the military people choose to rent because they're here for a short period of time, and it offers an affordable alternative to purchasing a home.
Okay, and plus the community around it, it's an economic benefit as well.
Correct.
Well, Brian Reeder, thank you for being with us today. It was a pleasure, and it was interesting to learn all about the South Sounds rental communities. Thank you.
Thank you, Holly.
Thank you, Holly. Next, we'll move into a single-family residential neighborhood with a broker from a 72-year-old real estate company. Stay tuned. We want to thank a number of corporate sponsors for making the production of this program possible. Rainier Connect, of course, Northwest Media Company, Elliott Bay Web Design, Done Right Handyman Services, FTEmagazine.com, and Mobility Hosting. Allen Realtors was opened in downtown Tacoma in 1940 by Harold A. Allen. It then added a Lakewood branch office in 1948 when Harold Allen Jr. joined the firm. Today, it's led by the Allen son-in-law, Mike Larson, who's also a leader in real estate circles around the Northwest. He served on the board for Northwest Multiple Listing Service. That's the trade group that serves your industry. I guess it's in the nature of long-serving real estate people like yourself to always be optimistic. Are you able to reach that point today? Are you optimistic?
You know, I am, and it's been a long 4 or 5 years. And I'm not saying that we're out of this recession, but there are definite signs that that good things are in front of us. And it's not just the number of transactions that come across my desk, or it's not just how much the phone rings, or the people walking into the office, or the number of listings, or whatever tangible things. It's, you know, the data is really backing up the fact that we are seemingly coming out of this big hole that we've been in for the last 3 or 4 years. Pending sales are at almost 6-year highs. I mean, and inventory is shrinking. Now, shrinking inventory and more demand, you know, are good. I guess what I'm saying is it's becoming more of a balanced supply and demand scenario than it's been for the last 3 or 4 years. But you know, you take that, and you take the fact that, you know, the economy nationally and locally is slowly improving. Consumer confidence is slowly beginning to turn around. You know, I think the presidential election is going to have a big say in what happens in our industry. But all those things, all those metrics, I think, point to a positive future.
Again, from the perspective of your company, which is arguably the oldest real estate brokerage in Pierce County, at least, this is not like something we've never seen before, is it? When did you see the beginning of the current housing downturn? Was it 2008 or even before that?
The actual top of the market, as you know, was in my judgment about summer of '07, and that's when values, I mean, median home values in Pierce County were $285,000. Now they're $175,000. Wow. So that's like a 38% decline. And you know, looking back, it was all good. I mean, it was great. You know, this was the normal, and clearly it wasn't. I mean, they were artificial, could not be sustained, and you know, the following years were indicative of, you know, the fact that those were not sustainable and that they were not real numbers. But it was fun while it lasted.
I bet it was. Again, historically, when else have you seen such a downturn?
You know, I'm in the 72 years of this company, I've only been here for 16 or 17. So this is the first kind of real recession that I've been through. And you know, I mean, real estate has always led us out of recessions. Mm-hmm. And real estate is lagging this time. And I think it's because of all the distressed properties. You know, the product of all the loose lending and all the artificial appraisals and things that helped get us into this mess. And thankfully, we're finally, I mean, we're not out of the woods yet, but you know, the fact that those are finally getting off the books and we're finally learning how to deal with those, you know, we're turning the corner, I think, now.
And it's not just the buying and selling of residential properties, it's the construction of them. Home building has been severely tested, and they're not quite coming back, are they?
No, they're not. No, they're not. And you're right. Construction, carpet layers, lumber, inspectors. I mean, we're all in this thing together, and that's why it's so key that the housing industry rights itself, because once it rights itself, everything else will fall into place. I mean, historically, that leads everything else coming back in a similar way.
Now, Mike, you talked a moment ago about how the inventory is down and the demand is growing up. Back to my Econ 101 class, that says that's going to help build the valuation, the pricing of the market, isn't it?
Well, it should. It should. I mean, inventory is down because more people are getting off the sidelines. I mean, the fact that the interest rates are creeping a little bit is not all bad news. I mean, it's getting some people off the dime. I mean, we don't want the rates we had in the the late 70s and 80s, but I mean, 4%, which is about where it is right now, is still a screaming rate for anybody who's been around this for 15, 20, 30 years. So. But the fact that the buyers are finally getting off the sidelines, the fact that we're again learning how to deal with some of these distressed properties, or not some, all of them. I mean, 3-4 years ago, short sales were just a nightmare. I mean, nobody wanted to do them, and they just sat there because nobody wanted to do them. Finally, we're understanding how to standardize the process and to push those through to successful closings. I also think that some sellers who didn't absolutely have to sell are kind of pulling in their reins a little bit and saying, you know what, I'm in this for the long haul, and I'm going to take my home off the market because I'm here. It's that getting away from the investor hype, I guess, that we went through in 07, 08, 09. And getting back to the traditional role of housing, which is to provide shelter and to help someone create wealth long term, not short term.
How can the consumer filter through the hype? And we all want to be hopeful, and yet perhaps overly hyped activity got us into some of this mess. So how do we get ourselves back into balance? I have perhaps an inappropriate question, but how do we ever know that what real estate agents are telling us is real?
Well, because we're the most trusted members of, no, I'm kidding. The rule of thumb in real estate is always to buy low and sell high. Mm-hmm. And so if somebody says, hey, is now the time to buy? I mean, if you were an investor looking to flip homes in the fall of 09, I would have said you're crazy. And yes, I would have said no, now is not the time to buy. Again, getting out of that hype mentality and into more of the traditional role of what we do. I mean, if someone is in the market to buy a home in which to live, not as an investment, I mean, not to flip it, then yes, I think if you're in it for the long term, there's rarely a time when it's not a good time to buy.
Okay. Some of what we're reading now is that the demand is up, so that, at least in perhaps other communities, we're back to the era of multiple offers and offers higher than the asking price. Is that something we're seeing in the South Sound of Western Washington?
I'm not saying it so much, but so long as you've got competition among buyers, and not a shortage, but a limited amount of supply, there's always the chance that you're going to have multiple offers or more than full price offers. And so that balance of more than one buyer fighting for a property is starting to come back. I mean, I haven't seen it a whole lot, but yeah, I mean, I've heard that that's happening in King County, and it could very well happen down here if those the supply and demand numbers balance out. Yeah.
I'm understanding that pricing is really critical, whether you're trying to sell your property or, in fact, if you're trying to buy a property. How is the pricing really established?
Well, I always tell people pricing a home is as much science as it is art. I mean, it's both. But the market is the market, and if you pull up comparable sales and make the adjustments accordingly to the property that you're going to be selling, I mean, if I do my job right, you should be able to tell me what your home is worth. I guess that's what I'm saying. The market is, and of all the things that we realtors do, and I say we do three things when we help people sell a home. We help them on price, we find a buyer, and then we help navigate from this table to the closing table. But probably most important is the pricing part of that, because it's always easy to come down and let's price it high and we'll see what happens. Well, the first 2 weeks a home is on the market, has the biggest splash value. The neighbors talk. It's a new hot listing on the computer. It's on the reader board. I mean, there's the buzz that goes with it. And if you lose the opportunity to sell it there, and homes that are priced right will sell in any market, And the problem is sometimes it sits and sits and sits, and then it gets the stigma of what's wrong with that house. Right. If
Is seasonality a factor too? Is springtime, early summer that we're heading into, is that more typically a transaction
Absolutely.
time?
Days are longer, the kids are out of school, the jobs, the promotions and the transfers happen typically in the spring, summer, and those months. And historically, I mean, if you look at the numbers for pending sales, February and March are usually the ones where they tick up a lot. And so, the hope is that trend continues through the summer for a strong summer. The fact that the inventory is so low and that there's more of a balanced, I mean, the inventory of homes is another gauge that we use to measure a normal or a healthy market. And it's gone from almost 11 months of inventory to about 4.5 months of inventory, meaning the number of homes that are active and divided by the number of homes that sell. And so if you've got 7,000 active listings and 1,000 that sell, you've got 7 months of inventory. Okay. Right now we've got about 3,800 listings, and we had about 800 sales last month. So it's a lot more balanced, normal, traditional market in that respect.
You've been in the business, as you said, closing in on 20 years. How's it different today? What's the impact of the modern world, if you will?
Well, clearly technology has transformed this business from when I started. They still passed out the book, the actual paper book that had all the listings in it, and you carried it around and you were the holder of the data. I mean, now the data is everywhere, and the buyers come to us saying, I want to see this house, because they see it on whatever website they see it. Their expectations of responding to them are quicker. I mean, it's still a relationship where they want you to help them find the house. They want to walk to the house with you, and they want to sit down at the table and write the deal. So
some things don't change.
Some things don't change.
And others have.
Yeah.
Awesome. Thanks very much for being with us.
You're welcome.
Mike Larson, the designated broker at Harold Allen Realtors. Thank you. Almost any weekend now, you'll be seeing open house signs through your neighborhood and others around the South Sound. It could be the right time for you to visit with a real estate agent. Maybe there's a new home waiting for you. Our thanks to Rainier Connect for its sponsorship of today's episode. We'll be back again next week, same time, same channel, with another edition of South Sound Business Report. We invite you to join us.
Here in Tacoma, there's a unique telecommunications company that knows how to serve their local community.
We believe in doing business locally, giving back, and connecting local businesses. And with Rainier Connect being a local provider, we feel it's essential for us to do business with them.
Rainier Connect, one company working to grow your business or to simply help you connect.
Thank you for choosing Rainier Connect.